Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. We're kicking into spring, folks. Not bad. We got another 10 days. Let's take a look. This is a quote by James Garner. Believe in yourself and everything you can be. Market-wise, let's take a look at it out here. The Dow Industrials finished up 138, NASDAQ up 15, S&P's up 7.5, gold contract up $1.20, trading at $1,165 an ounce. Where is he? Silver up flat at $15.72 an ounce. Platinum down 14 at $1,148 an ounce. Copper up 5.5 pennies at $2.68 a pound. Light sweet crude up 36 cents, $49.98 a barrel. Bonds, we had the 10-year up 11 ticks, 126.13. 30-year up 1 point and 3 ticks at 156.23. Both of those, folks, bounced on light volume. What you had in the bond market on Friday, the 10 and the 30-year, took out a B point of an ABC structure on the way down and took it out with volume. That's saying that yields are going to go up. We'll see what happens after this first ABC structure on the way down. It looks like we very well may have a total change of trend in the bond market. And if that's the case, you're talking about a change of trend since 1980. That'd be pretty wild. Would make sense since short-term rates are at zero, but bottom line is that Europe, the rates actually continue to go down. So it's going to be interesting to see how the Fed plays this out with the context that Europe rates are still going down. It just may be that the market is going to play this out, and the market itself is going to continue to sell these bonds off. And if that's the case, well, guess what? It's supply versus demand. King dollar up 26 ticks, trading out at 97.63. The euro up 8 ticks at 108. And the yen up 34, trading at 121.17. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Well, let's get over and take a look at the SPY. What you have here, folks, this is going across all the indices, too. You have an ABC structure down in the making right now. What we have done is this. We came off the high, and we talked. It's a small ABC. Bottom line, point-wise, your A point is that high out here, which is the 121.24. Your B's Friday's low, which is I'm sorry. The high is 212, not 112. 212.24. Your B point is that 207. So you're talking about $5. C, I suspect that the C point that we probably can get up into a few more pennies. The low that was established on the 4th, that low there where we did reject lower price and then went sideways, that's 209.06. You know, so that's about another 80 cents higher. I suspect we very well could go up and touch that. That's where you give it up. That's where you, if that's the C, which I expect more than likely it's going to be, that's where you take those 5 points away from. What would that set up? Well, what it sets up thus far is this. The SPY itself is inside the lower range. That lower range is saying it wants to go down to the swing points from December as well as February in the SPY. Those swing points, that relates to a 197.91 area. If we go to the cash S&P, and you want to be taking a look at the cash S&P, this is where it's set up inside the cash S&P. The cash S&P right now is trading at 2080. And if you remember, any close, and it was closed last week, was under 2110. You close under 2110, and what that's saying, what that is not saying, is that you're on the wrong side of the up channel. We had broken that up channel. We had broken that in October. Then it got back on the right-hand side of it 3 separate times for 2 or 3 days. Gave it up each time. What that sets up, number one, is that you're going to go for the 1972, 56 in the cash S&P. That's the smaller range, however. The larger price point here is 1820. 1820 to 1870 is the October 15th high volume swing point, you know. And that high volume swing point, folks, has been tested by many equities. Many equities have broken that, and in fact, if you take a look, let me just see if Chevron's underneath it. ExxonMobil, of course, Chevron's under it too. This is the XLE, the oil companies in general have some monster price problems inside the marketplace. I don't expect they're going to have any real cash problems because oil is not going away. There's no two ways about that. But what you do have in both cases, Chevron right now is trading at 103.95. That October 15th swing low was 106.65. So it took it out in spades. We go over to ExxonMobil. You take a look at ExxonMobil. ExxonMobil right now is trading at 85.16. That swing low out there was 86.91. Also took that out and took it out in spades. That sets up much lower prices. Gold contract. What do we have with gold? We take a look at the gold contract. Wide price spread, accelerated volume on Friday. What the contract did not do, which was positive, particularly in the face of the dollar doing an ABC structure on the way up, is that it did not basically take out the swing point from December 1st as well as all the swings from November. I suspect what I'd like to see first is this. Silver did this, but gold hasn't done it yet. I want to see gold test the 1162.90. Silver did it today. Silver, this is. So what silver did, silver tested the lows of Friday. We are at 1573, or as close as you can get. Actually, it closed a penny underneath it, huh? That's pretty amazing. So anyway, so silver didn't reject the price yet. We got lower volume today. Intraday, we had it rejected. Bottom line is that silver is showing, though, that it has been stronger than the gold market. Bonds. Let's go to we'll take a look at the TLT, the 20-year plus for the bond market. Bottom line is that that's an ABC structure on the way down. The TLT is traded at 124.64. Your A point is 138. Your B is 125. So you get 13 bucks. That sets up a 117 TLT. So we'll see how that does shake out. But it looks like now what we've done in the bond market is that you're doing another B to C of an ABC structure on the way down. That would be a smaller one. So now what you're going to have, you have multiple ABCs. You have a smaller one inside a larger one, which basically brings the probability higher that, in fact, bonds are going to lower price. Let's go to Dave in Clearwater. Hey, Dave, what's going on?
Tom.
Hey.
What a ride that was last week, my friend.
No doubt, man. Hey, how you been?
I've been doing very well. How about yourself?
Good, man. Good.
I was thinking about you, man. I was looking at the bond market, and I'm like, wow. I wonder if what Tom's going to say when this is all, because I know you've been bullish on bonds like since the day I met you.
I know.
I'm thinking to myself, this bull runs over. What's after that move?
I know, man, and it's really good. Folks, it's really important if we can get this thing right, because that is going to be a dynamic change, and it looks like it is, man. I mean, right now, hey, we'll see where it's shaped, but I'm going to start selling the counter trend bounces.
Yeah.
I mean,
yeah,
that's where this seems to be setting up. It's hard to figure out because the rates continue to get down across the world. It's like, okay, how are they going to pull this off? But listen, if everyone sells the bonds, it's going to happen. That's
Yeah. Well, as you taught me a long time ago, ignore the noise and look at the charts.
Yeah, no doubt.
Tell you where it's going, where it's moving. But I might be, I know you feel the same way too. But I'm of the opinion that we are, while there are still areas that are not that great. I'm not trying to say it's the bull run of the 90s in terms of economic growth, but I think we've hit bottom. We're coming up, and before too much longer, this massive amount of liquidity that the quantitative easing is put into the banks, which are now sitting on the ledgers and not being loaned out, which is why I believe, in my opinion, why we're not seeing inflation as small businesses and companies in general come into banks with a solid growth, with a solid business plan, and they start to see, okay, it makes sense to loan this money. As they loan this money, the economy will continue to grow further. We'll get the velocity. We will have the inflation at some point. At some point, I think the collapse in energy is kind of, put a curtail on that for the short run, let's say the next couple of 2 to 3 quarters. But as time goes on, I think we're going to see that, and then that's when the inflation is going to kick in.
No, I agree,
man. At that
man.
point, interest rates are going higher.
I agree. Here, just stay with us. Dave, stay with us. We're coming right back.
Yeah, no problem.
Cool. Stay right there, folks. Coming right back. Dow is up 138. Nasdaq up 15.